Well, we have the management of DLF joining in, so would invite you to listen in as well to their commentary. The company has reported very strong bookings in Q3 with a surge of 261% year-on-year. They've also achieved the full year sales guidance in 9 months of FY24. Ashok Kumar Tyagi, the MD of DLF, joins us now to talk more about that. Mr. Tyagi, good morning, and it's always great speaking to you because, you know, we get to learn so much, not just about DLF, but about the situation in the real estate industry. So tell us, where are we at currently? What is the demand situation looking like between both affordable and premium? And what do you see as the tenure of the real estate industry over the next, say, 12 to 18 months?
So good morning, Sonia. Where are we? I think we are in a good place. I think that's that's obvious. In all fairness, I think now, it's almost been 2.5 years since the current upcycle began. And frankly, every quarter, it's just acquiring stronger legs and, moving across geographies and across price segments. If at all there's been a marginal slowness, I think it will be at the lower end of the segment, but clearly, I think for most houses in the mid-range, premium, luxury and super luxury, and I think across geographies, the markets have been very strong. The demand pipeline has been very strong. And frankly, from whatever pre-interest we are seeing for our future launches as well, I think that continues to, stay strong for the time period that you mentioned.
But are you seeing any slowness at all in the lower end or not yet? That's just
in
what
the lower
assuming.
end. Look, we don't play in the lower end, Sonia, as you know, but clearly, we are seeing, in fact, we are also seeing a couple of people who used to specialize in the lower end gradually migrate to the mid end, from their licensing and launch standpoint. So I think clearly there may be some marginal slowness there. But I think in most of the ends, which are like the upper middle class and the relatively upper classes home buying, I think the segments are very strong right now.
Mr. Tyagi, hi, good morning. Prashant here. This year, FY24, of course, you're going to easily beat what you said earlier in terms of guidance. And I think the pipeline for FY25 in terms of launches is also very, very strong. So could you talk to us a little bit about how that launch pipeline is developing? What should we expect in 25?
Have I lost you, Prashant?
We can hear you clearly, sir. But I think we may have lost the video. I can hear you. Can you hear me, sir?
Okay. Yeah, I can hear you somehow.
No, you're back. You're back. Audio and video. Please go on. Yeah.
Okay. So, from the next year standpoint, we clearly have identified and outlined our launches even in our analyst presentation. We are looking at least, 2 major launches in Gurgaon for sure. One which would be a successor to the launch that we did in Q3 of Privana, and one which would be a more upscale luxury launch, on the Golf Course Road. So those 2 launches will happen in 24-25. We should have a launch of luxury villas in Goa. We should have at least 1 launch in the Chandigarh Tri-City. And definitely we should hopefully have our launch maybe in Q2 in Mumbai. So I think we have a strong pipeline. I think the total launch pipeline for next year is north of 30,000 crores. And I think we clearly hope that we can exceed the sales volume that we have generated this year.
Okay, all right. Hi, Mr. Tyagi. You set the tone for the interview, right? By saying you're feeling good and, things are looking up, and your tone as well is telling us more about it. But give us a few numbers then, if you can. In the 9 months, you've done around 13,300 crores of sales. What do you end this year with? And on that sort of a base, what kind of a growth could you look at? And you briefly mentioned about Privana too. Which quarter will that get launched in?
So I think it should get launched, I think, in the first half of next year. I think, the exact quarter, whether it's Q1 or Q2, will depend on the entire, approval processes of it, frankly, in that sense. It should get launched there. We should definitely close, as you're right, that since we had exceeded our annual guidance in 3 quarters, our total annual sales volume for this fiscal should be higher than our guidance of 13,000 crores. That is very clear. And Nigel, traditionally, we give the guidance for the next year when we do the analyst meeting of the annual results, which would typically be sometime in May. So I think I'd say hold your horses for the next year's guidance. But I think clearly the markets right now and our launch pipeline support a strong guidance for next year as well.
Okay. You want to tell us a little bit about office income? That was flat this quarter at about 860 odd crores. How is rental income looking like in the commercial space, not just for you, but for the industry as well?
So I think, really the commercial, and I'll first talk of us and then of the industry. I think the last bit of the piece that was slightly holding back the commercial occupancy was the uncertainty around the SEZ space, and that the government, I think, was kind enough to issue those rules about denotification, etc. So I think even that last locked vacancy levels will start opening up. In our case, our non-SEZ vacancy levels were actually down to almost pre-COVID levels of 4 to 5%. It was the SEZ vacancy levels which were pulling the overall vacancy levels slightly up. But I think now that should get sorted out. I mean, we are clearly looking at a exit March 25 run rate, which is touching almost 5,000 crores on an annualized basis of the total Cyber City net income, in that sense. And I think the pre-leasing for all of our existing offices is complete. We are building out, 1 to 2 million plus space in Gurgaon, downtown. We are building a 2.5 million space in Chennai, which is completely leased out. We are building almost a 3 million square feet space in joint venture with Hines, for which pre-leasing has commenced. So really the pre-leasing scenario and the rentals are both very strong, The only thing, if at all, is that there's been a shift from third-party IT providers increasingly to global captives, GCCs as they are called. And it is those which are taking the big spaces now.
Yeah, no, I was actually going to ask you that, exactly that is this all captives? A large portion of it, and I think you answered
a large chunk of it, Prashant, are the global captives now. Absolutely.
Okay. Just to come back to the residential side, what's been in 2023, calendar 2023, what's been the price on an average? I mean, different projects, of course, I mean, you would have priced differently, but what's been the price increase over 22? And what should we expect for 2024?
So look, I think it'll differ from individual specific projects. There are some projects where maybe the demand is far outstripping the supply, so there the numbers could be slightly awry. But I definitely say it's been a comfortable double-digit increase across the calendar 23. I mean 24. Let's see how it pans out. But I think clearly right now the pricing trends continue to be strong. I mean Privana, which we launched, I think we launched at a very good price point, and we got an excellent response to that. In fact, Privana, we also did one thing, Prashant, that we hiked the upfront deposit, the booking amount, from the conventional 10 lakhs to 50 lakh rupees. And yet we had 1,100 checks and a few hundred in the wait list, really. So clearly there continues to be a rush for good properties from credible developers. I think if at all the industry shift towards credible developers, I think is now a known story across geographies, not just in Gurgaon. And I think hopefully that sort of sustains for the next some time.
So in NCR, as you see it, I'm asking you this, maybe an unfair question, but it's such an important point that you make, right? Credible developers. So there's DLF. Who else is there in the NCR region?
Look, I wouldn't want to name specific names, but the fact is that people who are credible are clearly the ones who have launched, including a couple of at least one who is essentially a Mumbai-based developer who has come and done some good work in both NCR, in both Noida and hopefully Delhi. So I think clearly, as long as you are credible, you have a proven track record, I think the people are clearly willing to move to you. The unknown developers, I think, will continue to have a challenge, I think, because people still haven't forgotten the horror stories of the late 2000 teens. And I think that will still take some time to come out of.
So at least 10% price increase, just to complete that loop, into 24 over 23?
Yeah, I wouldn't like to make a forward-looking statement, because I think it will really depend on project to project, really, frankly.
Okay, all right. Mr. Tyagi, you announced your intention to acquire, I think, a 29-acre stressed asset in Gurgaon.
Yeah.
Could you give us a few details? What could be the approximate cost for this one? What are the benefits of acquiring this particular property? If you would have done some kind of rational, some kind of maths as well, if you could share some details.
So, Nigel, this 29 acres is on what is called the Golf Course Extension Road. That's a micro geography where we had launched a project called Arbor about a year back. and we actually did not have any more land parcels there. And so this was a particular asset owned by two multinational, which had been mortgaged to two multinational banks. And for the last 1 year, we had been working with those banks and the erstwhile borrower. And eventually, we ended up acquiring the loan first, in that sense, which is a relative rarity for a real estate developer in India. So we purchased those bonds, and then we invoked the necessary regulatory processes, in an amicable and in conjunction with the borrower. And so of the 29 acres, I think about 20 odd acres have now been conveyed to us. The balance 8 or 9 acres will require some degree of regulatory processes which are underway. From a cost standpoint, I think the total cost of this 29 acres to us will come to about 1250 odd crores. And I think there will be another 350 to 400 crores that will go into its approval to max the FAR. So I think overall, and it should be about a 7.5 million square feet saleable area that we'll eventually get from them. So, hopefully we will make our land investment on this transaction multiple times over in the course of the next few years.
Okay, all right. Can you tell me about this 147 million square feet land bank development as well that you're evaluating? What are you looking at in terms of execution? What is the potential from here on, and what's the idea behind it?
So, Sonia, we articulated a launch pipeline about 3 years back, which we have been executing. I think a large chunk of that has been executed. We have identified the next projects that we propose to execute. In fact, if you look at our analyst presentation for the December quarter, we have lined up, I think, if I'm not mistaken, about a 32,000 crore launch pipeline for next fiscal and a potential 40-odd thousand crores beyond that. So I think this will continue to be monetized depending on the markets and depending on our own execution bandwidth in a reasonable manner. We believe that the total land bank that we have, clearly should sustain us for definitely more than a decade. And we'll obviously, be open to opportunistic buying like the one that we did just now.
Okay. By the way, Mr. Tyagi, that Camellia project is sold out? I remember you saying that you're selling about 10 units a quarter.
I think last 20 odd units bachi hui hai, frankly.
Acha, the bees bachi hai. The ticket value is so large that...
So if the three of you are interested, we'd be happy to...
I was going to ask you about the Goa property, but you said it's a bungalow or it's a cottage, so then I can't. I'm looking for a smaller size house for my post-retirement, but that's why I skipped that one.
The Camellia project is...
But Nigel, watch out for the space on Goa, because this may not be our last launch in Goa.
Oh, indeed. I'm looking at it closely. I think the buyer is going to speak now, Sonia.
I already, my take on all of this is very different. I have one home that I live in. I don't believe in buying any more homes. I believe investing that money elsewhere. But that's a story for another day, perhaps. What about you?
Absolutely the same as you in terms of philosophy. Mr. Tyagi, that it's what, 50 crores a flat now? What's the going rate?
So now I think it will be closer to 60 for the base flat. Yeah.
I see. Okay, got it. Mr. Tyagi, thanks very much for joining us. It's a pleasure having you here. And good chat as always. And thanks for joining us.